with them, the future income stream will be from the platform level directly cut portion of it to as a payback mechanism so that we can manage risk in an efficient way.
Yeah. And by the way, like in the real kind of financial world, this is called factoring, and it's a huge, huge business, right?
That's right.
And it's basically that, like, for Uber drivers or, especially like in the, basically all independent kind of workers really rely, paycheck to paycheck. And it's, factoring just means, if you're going to get paid in 2 weeks' time, or you have a pretty predictable stream based on the number of hours you're driving your car or whatnot, then you just front part of that so that they can cover their ongoing expenses, right? Basically extend credit in a similar manner as a credit card, but, working capital revolver facility of sorts. Who, in this network, do you envision someone on the other side that would extend the credit? Who would that be? Like in traditional factoring business, it's like hedge funds and whatnot that, credit funds that want to earn, a pretty good return on the extending this type of credit. Is that going to be the case here, or who do you think? Like, how would that flow kind of work on the supply side?
So yeah, indeed, I expect. So that's back to look at Huma on our platform. Who are the liquidity providers? Today, generally, we see a lot of them. First of all, from different crypto ecosystems, different chains. They want to, they see all the use cases are very interesting. They want to go attract the use cases on their network. So we do see those protocol treasury is definitely one. Then we also see a lot of family offices. And family offices, they do really value about stable yield, but meanwhile have some kind of exposure to crypto's emerging success. So we definitely see quite some, family offices engaging. And what you mentioned about the private credit and, especially just the credit fund, we expect those will play a major role. But at this moment, we're still in working negotiation, different partnership discussion with them. Back to for Deep in particular, I would expect this might be an infrastructure we're open to a lot more just average crypto community participation, because just I believe many people like me would be really believing decentralized ownership, decentralized together to building the future generation of infrastructure. If I have opportunity to participate without doing all the pre-funding all by myself, as long as I providing some funding, but the infrastructure, the Deepin project and RWA platform together can use my future income stream to fund the devices, I will be very cool to participate. So I do expect that this can be a very interesting concept for the broader crypto community to participate.
Mm-hmm. Do you see the reverse also true? Like at some point, you build a sufficient predictability and credit on chain, then you can extend that like on the reverse, not just for essentially you have a better predictor of credit worthiness by your on-chain activity than what has been historically true for your off-chain activity. Oh, by the way, a lot of users just don't have, like, unlike the US, many other jurisdictions don't have like really robust like credit profiles for their folks, businesses, and individuals. Is that an area that you guys eventually foresee stepping into?
Yeah.
Because you are aggregating and at the center of like collecting all this data and creating a profile for basically whoever's behind that particular address.
Yeah, absolutely. What we really build Huma protocol is just allow business and people to borrow against their future income stream. Right now, so far we focus more on business because that is the infrastructure is there, and we are able to leverage RWA infrastructure to do so. For on-chain consumer lending, definitely there will be a lot more infrastructure to be built. First of all, how do you make sure the income sources are reliable? And because there might be manufacturing there. Secondly, the on-chain credit building. I know a bunch of projects are building, but that will take some time. And third one is, which is I think crypto will be in a very good situation, is that when the income is generated and smart contract can directly pay to whoever originates the debt, which can be much better and much more efficient than the traditional Web2 world. So I do say that is the future, but it will take some time and takes the army to build the infrastructure for that.
Yeah, absolutely. I'm personally always very frustrated with type of payments and the contractually, like when you think about any relationship you have with a vendor, whether it's an airline, an insurance contract, everything really is the so many people don't end up contesting because it's just a cumbersome process. But when you can codify that in a smart contract, the issue has always been the Oracle, the reliability of the network and whatnot. But hopefully at some point, a lot of these type of, at least for the more simplistic use cases, we can use smart contract as escrow accounts to minimize counterparty and then offer some of that efficiency gains over to the consumer via lower interest rates, cheaper policies, whatnot. This could probably take many, many years to get there, but I think we're just barely scratching the surface on this idea of extending credit, minimizing counterparty risk. Business is inherently global. Finance still doesn't operate smoothly as other stuff in the internet, but we have the payments layer of the internet here with stablecoins and DeFi.
Yeah.
It's sort of inevitable it's going to happen.
Yeah, I think it will happen. Besides the factor you mentioned, I also hate to bring back regulation also is another concern because for business lending, regulation is relatively easier. So that's why you see a lot of RWA, those guys, we all focus on business lending. The consumer side usually come with a higher risk. That would be, I would imagine many platforms would wait until there is better clarity. And technically, sure, I see a bunch of use cases. I would love to do it, but reality is that the scale may not be big enough, and also regulation complexity is higher. So that's just the timing probably is not the best. But with time moving forward, I definitely see a lot of explosive use cases from consumer side.
Yeah, that's awesome. All right, guys. Well, I think this has been a really fascinating discussion. I don't know if anyone in the audience has any questions for the team here. I think you can just raise your hand, although I'm not seeing anyone at the moment. Okay, I guess everyone's reading the Eigenlayer white paper.
That's right.
That's right.
Or not. Good luck trying to control F that one.
Yeah.
How can I buy this?
Yeah. Good luck, non-transferable. Well, I mean, I guess if no one has questions, I mean, I don't know, folks, in the last couple of minutes here, as we look to wrap up, if there's anything else that you guys want to touch on that we haven't covered, or just want to double click on a particular topic that we've discussed here.
Maybe just one thing, again, this has been a very pleasant conversation. Thank you, Santiago, for hosting and all these insightful questions. To me, the most exciting part of it is, to your earlier point, everything looks like it's very nascent. It's very early stage. There's still a lot of work to be done, and to me, that's the most exciting part, to be honest, because when you see how better things can be, and when you see these large financial institutions that we originally thought before meeting ARF would never move a pen, right, to jump into this ecosystem and go through all the hurdles they're going through and start adopting stable coins even before sometimes their jurisdictions fully cleared, right, the treasury operations to make transactions in stable coins, or even like buy and settle back. When you see those large players move the mountains to make it happen, you realize this power that we believe in and how better things can be. It's not just a delusion or like a self-fulfilling prophecy, but it's something that's realized from the outside, because the people who see the pain the most are the ones who deal with it every single day, right? And then in our case, that's very encouraging to see. And to be honest, this year we believe as long as we bring in more power to our liquidity and more integrations with stable coins, we'll be able to serve just the, what seems like a endless demand from the existing network. And as more partners come into play, more regulations and things clear out, it just, if today Visa is doing $4 trillion a year on their own, pre-funding quote unquote network, there's no reason for smart contracts plus stablecoins and money moving more freely within new regulatory frameworks should not build a network that is 10 times more scalable, right? Because money lacks efficiency. So that's the part I'm really excited about.
Yeah, sorry, that was on mute. I think it's such a good observation. Fortunately, unfortunately, we tend to like measure the progress of the industry by like, okay, we've crossed a billion or we have X TVL. I do think that you know as I said earlier, like, it's sort of inevitable that these things are going to be adopted because the first thing thought when I discovered crypto and then when I saw the Stripe announcement is like the payments are really kind of a very killer use case. Of course, like historically, a lot of businesses were like, "Why would I accept Bitcoin? It's such a volatile thing. I don't know if you're transacting $100 in Bitcoin, you might get paid 120 or 80." Of course, Bitcoin has become less volatile over time, but that was like years ago. Now we have stable coins. We have something like USDC, like increasingly is more and more accepted. It's like anyone that has run a business, like if you're gonna be paid immediately, there's like certainty of settlement. There's no counterparty risk. There's no commission rate. It's instantly settled. Like it's just a huge unlock, and it's just a matter of time before we get there. And the progression, if you look at the stablecoin adoption, is not going to be 1 to 2. It's like going to be like 1, 2, and then like 10, and then 100. Like it's sort of, I think this is normally how things work. Certainly not linear, but yeah, it's really encouraging. Hopefully, I think the biggest bottleneck is still regulation, unfortunately. But you know, commerce is inherently global, and businesses will begin to transact as jurisdictions make it easier. And it sounds like we are moving very positively in that direction, even though at times it feels like it could go faster. But we'll get there. We'll get there for the same reason I like to comfort myself in the sense of like Uber faced a lot of resistance from in every jurisdiction that they faced incredible amount of resistance from the taxi lobbies that they were displacing. But ultimately, the consumers it was such an unlock and a positive experience for the consumer that regulators couldn't overlook that. And so the best we can do as an industry is just continue to build really good use cases, whether it's deepen, whether it's just a number of other applications for people to live more productively and get more benefits from. And so I think that's all we can really do, because if we really nail that, then everything else kind of falls into place. And obviously you guys are playing a big part in that. It's really exciting to see the merger. It's really exciting to see kind of someone really tackle this and specifically as it intersects with just global commerce, which is massive and really inefficient, but also crypto native use cases like deepen that require financing. So really exciting discussion, guys. Thanks everyone for joining. And yeah, what's, I guess, the best way to keep track? Are you guys going to continue to operate separate Twitter accounts, or what's the best way to kind of keep track of your progress? If anyone from the teams could just comment on that, that'd be great before we wrap up.
Herbal, you want to speak?
Please follow both Huma Finance and ARF. We'll announce more exciting stuff in the coming months as well. And yeah, right now, ARF is focusing on this amazing use case with cross-border payments. Huma is building new capabilities into its protocol for all of these use cases, and eventually you'll see also some overlaps in terms of projects we're going to be announcing later this year, and hope to keep everyone entertained with all these exciting innovations. And again, to maybe Santiago, your point, playing the long game here is the ultimate game. There's no shortcut. So we'll be building as long as there's something to be built to serve the clients better.
Yeah, Santiago, to your question about it, we have intentionally made a decision that we are going to keep both ARF and Huma brands. because ARF is focused on PayFi.